Okay, this is Professor Campbell with the balance sheet conclusion of our financial statements of Mystery Company. Okay, balance sheet. On the balance sheet, it's as of a date. So it's not for the year ending. It's the only one that says as of a date. Okay, and this is going to be in millions, except par value. Okay. Starting out with assets, I have a classified balance sheet. So my classified balance sheet is going to have current assets. They are going to be in order of liquidation, which is generally what's on the financial statement. What's on the trial balance in their order. So we're going to be looking at the liquidity of things. Rarely do they change as far as the liquidity. So cash and cash equivalents is first. Okay, and that is going to be starting with the dollar sign. Our marketable securities, okay, our marketable securities, how do we know that they're current assets? It's the intention of the available for sale securities, so it's in the intention. So you're going to have to see some kind of memo or some kind of note that says that they intend for all the available for sale securities to be current assets. Okay. Accounts receivable are shown net. What are they shown net of? Allowance for doubtful accounts. Okay, so they're shown net. I'm going to put that in as net. Inventories is next. Inventories, you don't need the comma net on inventories because inventories lower of cost or market automatically puts it at its net value. Prepaid expenses. Prepaid expenses. Okay, so there's my cash, my marketable securities. I'm putting the contra account against the receivables, inventory, prepaid. So these are my current. So this is my balance sheet. And these are my current assets. Okay. Looking down here at other assets, and I referred to some kind of a memo that all other assets are held long term. So they gave me some kind of information on that. So here I'm going to subtotal my total current assets. Something is very valuable for our quick ratio. Okay, and then list the long-term assets here in their order of liquidation. So property and equipment, that's something that's solid. Operating leases, goodwill, also shown at its net value. Intangible assets at net. Deferred income taxes, and other assets. So we have property. No, it's not going to be subtotal, so I'm going to start it over here. Property and equipment, comma, net. So I'm going to net these two here. Operating leases. Goodwill. There's a way to tick these things off as you're using them. Go ahead and do that. If you're using Excel or something like that, you're going to have to highlight them or change the color of them or change something to make it bold or something like that in order to indicate to you that you've used those numbers. Intangible. Deferred income taxes. Deferred income tax assets. Deferred income tax assets, okay? So let's make sure that we're clear on that. 10,979 deferred income tax asset to be able to offset future income taxes. 10 billion. Okay, other assets. 6425. Okay. So here's my current assets and my, okay, so just a subtotal line here, and then a double underline for total assets. And that is going to equal 11,601,000,000. Go ahead, Google that company and see if you find a company with 111,601,000,000 in assets as of 6/25. Okay, that's my balance sheet for the assets. It has to equal the liabilities and stockholders' equity. Okay, so I'm going to take a shortcut here, and I'm going to show you the liabilities. Okay, so I've got liabilities. I've got current liabilities, liabilities and stockholders' equity. This is the second part of this particular statement. Okay, so it's the second part of it. So it's the second page. So I have my accounts payable, accrued others, and short-term debt. So in this particular case, none of their long-term debt is currently due within 12 months. Clever writing of debt, okay, is able to do that. So I have total current liabilities. Then I put in my long-term debt, long-term operating leases, and other long-term, and get total liabilities, and that's subtotal. In the center of that is the commitments and contingencies with no notice. So you would have to have some kind of a footnote that tells you that there was a commitments and contingencies in the preparation of your financial statement. It would be in your other supporting documentation for a simulation. Okay, stockholders' equity. This came directly from our stockholders' equity statement. So here it is, and here are our numbers. Okay, 24. Additional paid-in capital, cumulative 28. Retained earnings 68. Here's my total. So this all came directly from this statement. It's already been done. We don't have to reinvent the wheel, and we don't have to refer to the trial balance for those numbers. Okay, the important part is that this particular statement, these particular numbers came from the statement. So what we had to do from the trial balance was create the assets and total assets and create up to the total liabilities from the trial balance numbers. Then we switch our perspective and we go to our statement of stockholders' equity, and we find those numbers and turn them so that they become the statement of stockholders' equity. We double check to make sure that our total liabilities and stockholders' equity are equal to our assets. The formula works. Our accounting equation is complete. That is the financial statements of a mystery company. Go ahead and Google this company and see if you can find out who has $111 billion in assets as of the balance sheet date January 26, 2025, and they are a leading company, leading public company in artificial intelligence. But this is the low tech, slow tech way of doing the financial statements. And I hope you've taken a look at the details of where things are subtotal, dollar signs, the titles, and things if you are ever asked to do a trial balance um, from a trial balance to financial statements. So this is the conclusion. Thank you very much. This is Professor Campbell.